Right, evening. I want to start this evening by paying tribute to the work that the Society's colleagues play every day of the year in serving our members, customers, and the wider communities that your cooperative society operates in. I think it's very easy as cooperators to forget that the cooperative way of doing business genuinely makes a difference to the lives of the individuals and the communities that we operate in. It's not just a gimmick and it's not a tick box exercise as many businesses see the things that we believe in. For 158 years, the Society has put membership and communities first and foremost. And even in the difficult times, when it's tempting to cut the level of spend in these areas, your Society has continued to support communities and members. In 2021, the Society set up the Chelmsford Star Community Fund to ensure that Society has got a mechanism to support communities, and since its inception has supported 42 groups in total, with £68,000 worth of grants being awarded. Kevin will provide more detail later about some of the groups that we've been able to support in that time. Without the support of our colleagues and their efforts every day, this would not have been possible. But our colleagues not only contribute to the impact on our communities, many go that extra mile in assisting our members and customers. And it makes me proud to lead a society that has colleagues that do so. And receiving positive comments from members and customers calling out individual colleagues brightens my day in a very difficult world. Several examples of praise come to mind. A customer recently wrote in complimenting a member of our furniture team in Braintree, who had been, in her words, efficient, patient and professional when assisting her elderly parents when buying 2 chairs. From the Chelmsford quadrant, letter from another customer who had inadvertently left a debit card at the till point. Our colleague, on realising, managed to track the customer down in Marks and Spencer's, returning her card to her before she got to the tills and was embarrassed by not having the means to pay. The customer was over the moon. We also get positive comments from our food business. So to quote another customer who contacted us about a food store in Wickford, she said, "The team is always super friendly, helpful and collaborative with the customers. They engage with all their customers and know most by name. It is endearing to watch, especially their interactions with the more senior demographic, often having a little laugh and a joke over buying the newspaper and a packet of crumpets. A lovely team." Travel, just one example from the travel business. Your travel consultant has gone above and beyond expectations with all her excellent knowledge of US hubs. I have used Co-op Travel in many places, including Nottingham and Clacton, and have to say the Chelmsford office is the far by best. And finally, our funeral team. They get the most feedback, as you'd expect, and this is publicly available on the Funeral Guide website. But to quote a couple of examples, we were very impressed with the personal touch we received from your family liaison officers in Danbury office. Both were helpful and considerate. I would highly recommend their services to others. Also, the service provided by the pallbearers was excellent. And then a final example of funerals, very to the point. And they said, friendly, helpful, thorough, efficient. Everything worked with no surprises on the day. And I think that those examples demonstrate how much our colleagues care about giving top service to members and customers. Before we move on to the main business of the evening, I feel it appropriate to mention the current crisis that is affecting all of the whole movement's food stores. While I can't comment on the exact circumstances around the cyber attack that the Co-op Group have faced, it has been widely reported in the press. You will have experienced, if you've been in our stores, the impact this is having on the availability of product in our stores. And certainly while out and about last week, we were getting comments from customers, when are you closing down? Are you closing down? It is desperate out there at the moment. We expect this to last a number of weeks. At the moment, the Society's food team are working hard to secure stocks of product from alternative sources, and hopefully that will begin to flow this week. But we know from experience, going back to the pandemic, that once stores have got to that position, it will take the distribution network some time to catch up. So while I can't put a number on it, what I think I can say with confidence is it won't be solved by the end of next week. We're still waiting some exact deadlines of when we can submit orders, but at the moment we haven't got that, hence why we are securing out stock from elsewhere. Turning now to the year that we are here to present, it's not a lot of good news, as the President has already impacted. When you put a group of retailers into a room at the moment, and probably forever and a day, it's not long before they start talking about how tough the trading environment is, the pressure being heaped on retailers by central government policy, and most frequently of all, the impact of the weather, good and bad. I was at a meeting of co-op CEOs just last week, and it's amazing how much more positive the conversations were due to the high temperatures that we'd received in the last week of April. Now, I can guarantee if we were in the same room today, it probably wouldn't be as positive given we've got no stock. But the conversation in that room on that day soon turned to the traditional concerns of what if we don't have a summer and we can't afford to have another summer like last year. And that, from our point of view, is what's frustrating at the moment. We have now had 3 weeks of cracking weather that we would normally dream of, only to find ourselves with no stock. The lack of good summer weather last year, without doubt, contributed to the depressed trading in our food stores last year. It also had an impact in our department stores, with fashion underperforming as people had no requirement for a new summer wardrobe. And this only compounded the challenges presented by the ongoing cost of living crisis. The conflicts that have taken place and continue to take place throughout the world continue to have an impact on the business environment. And in retail, we continue to see that. Inflation continued to fall during the last year, which is good news, but ultimately it's still inflation, and households are still worse off than they were in 2021. And we've seen the discounters benefit from that, as the discounters are the only retailers really that are growing market share. Inflation is forecast to rise slightly this year, with the anticipation of prices rising as businesses grapple with national insurance and the national living wage increase that took effect on the 1st of April. The British Retail Consortium estimates that the British retail industry will incur an additional £7 billion worth of costs this year through the challenges levied by central government. National insurance is expected to cost retailers £2.33 billion more than last year. The national living wage, £2.73 billion. And the reformed packaging levy, £2 billion. And this is against the backdrop of several years of cost rises driven by government policy. An article in Retail Week recently stated that the retail margins have been on a decade-long decline, from 6.9% in 2012 to just 4.9% in 2023. The sector has been weathering a steady erosion of profitability, in the words of Retail Week. This is a trend the Society has seen in its food business, but without the luxury of being able to remove layers of management and cost to attempt to mitigate the cost increases. You'd have seen in the media over the last year to 18 months a number of retailers that are taking management layers out of their stores, be it superstores, convenience stores, closing delicatessens, closing hot food counters, all in a bid to mitigate the cost increases that are being levied on retail. The Bank of England base rate has begun to fall after its 15-year high in 2023, but it still remains higher than most individuals with mortgage are used to. And this continues to affect the level of consumer confidence around personal finances. All of these factors have and continue to have an impact on the retail landscape, and will continue to do so through the next year. Turning to retail crime, again well publicised in the media, Retail industry continues to experience high levels of losses through retail crime, with little sign of any real action from the government or the nation's police forces. Statistics released by the Office for National Statistics earlier this year show that in the 12 months to December 2024, there were 516,971 recorded shoplifting offences, and that compares to 429,873 the previous year, an increase of 20%. However, you then look at the Association of Convenience Stores survey, and they believe that that number recorded by the Office for National Statistics is actually some way short of the reality. Their crime survey shows incidents totaling 6.2 million in the same period. They allege that the difference is due to underreporting. Retailers no longer report incidents to the police on the basis they know they're not going to attend or take action. The ACS put a number on that crime, 316 million last year, with a further 265 million being spent on the prevention and detection measures. And again, there is no guarantee that that will give you a return. How do you stop a group of 5 or 6 individuals coming in your store when you've got 2 staff and literally climbing over the counter and helping themselves to cigarettes? That's the reality of retail today. And you can go on YouTube and you can see CCTV images of events just like that across the country. From my point of view, what is particularly frustrating is the attitude of MPs towards the problem. So last year, I wrote to 3 MPs where we experienced high level of incidents, relaying the challenges that their constituents face every day when they come to work. Only 1 MP had the courtesy of replying to me. 2 just ignore the letter completely. To be fair to the one that did reply, I met the MP in the particular store on 3 occasions with the store colleagues, and she managed to get the police engaged. So some MPs, to be fair, care, others don't. I won't name any. But if they're not prepared even to acknowledge the issue with retailers on the ground and their constituents, people who put them in office, then are we really going to see a change in government policy? The challenges being presented by the economic environment continue to take their toll on the retail sector. 34 retail businesses failed in 2024, according to the Centre for Retail Research, with 7,500 stores impacted and 56,000 jobs. This is the highest number of stores and jobs affected since figures began in 2007, with the exception of 2020, which was obviously impacted by the pandemic. Already in January and February this year, 7 retail businesses have failed, impacting 206 stores, 1,233 jobs. I think what's really interesting, you'll see on the screen there, this is Beals that's now been forced to close because of the increased costs this year from the national living wage and the national insurance. So you'll see that you might just about be able to make it out that they called it the Rachel Reeves closing down sale. That is the impact of the current Chancellor's policies on the retail industry. Throughout the year, at the forefront of the board and management's mind has been the cost of living crisis and how we can stay true to our founders' principles of adding value to members in difficult times. We've been supporting our colleagues and pensioners through double discount Fridays again to help them ease the burden of the financial pressures. In supporting our members, we've continued to offer 10% off on Monday to Friday in select stores, and with the remainder of stores now, they offer members prices which are discounts on select prices across the store. Our investing members have also continued to be extremely understanding as we continue to manage the Society's share capital through the Society's rules, limiting the annual withdrawal rates and also requiring 90 days notice on withdrawals. As always, the continued loyalty and understanding of these members is much appreciated, and their continued investment allows the Society to invest in the business. So it's against that backdrop that we present the financial accounts for the year that ended on 25th January 2025. And hopefully you can see by that the challenges that we've faced that have led to the figures we're reporting tonight. To summarise the performance in the last financial year at sector level to start with, the food business, excluding fuel, bill payments and lottery sales, recorded a decrease in gross take-ins of 5.77% compared to the previous year. The decreases was due to a combination of the smaller trading estate after some disposals and the challenges presented by the summer referred to earlier. On a like-for-like basis, the core grocery turnover fell by 3.56%. Volume growth continues to be a challenge, not just for the society, but for the whole cooperative movement. And driving footfall to our stores continues to be the priority. And you would have noticed as you've been visiting stores locally that we've now got more parcel lockers in stores. Purpose of those is purely to drive footfall to those stores, those locations. In the year, the Society made the difficult decision to dispose of a number of unprofitable food stores, including South Ockenden, Broomfield and Duke Street. In the case of Broomfield and Duke Street, the Society owns freehold of these properties and now collects a market rent from these sites, which not only means we've reduced the impact of the losses from the stores, but we're now getting a decent return on the assets tied up in those properties. All of the stores were sold to independent retailers, protecting the jobs of the colleagues employed at those stores. A number of colleagues at the sites decided to stay with the Society and have transferred to other stores. Trading profit in the food business fell year on year by 48% compared to the previous year. That's a result of the lower number of stores and an increase in losses from other stores. Department stores continue to be one of the biggest trading challenges that the Society has. And in 2024, gross take-ins in the department store business declined year on year by 4.2%, as customers continued to battle with the cost of living crisis, and the method of shopping for those items changes still further towards online. Underlying trading losses in department stores fell in the year by 17%, totaling £396,000. It was lower than the previous year on the basis of the actions that we took to remove cost from the operation, taking out space from the retail floors in both Braintree and Chelmsford. The board and the management continue to explore all opportunities to eradicate the losses from the department store business. Travel's gross take-ins were positive in the year, increasing by 11.2% compared to the previous year. Previous year, you recall that we reported that we'd had staffing challenges. These were resolved early last year in both branches, and both branches were moved to more prominent positions. So if you've been into Chelmsford Quadrant, you'll see it's now on the ground floor on Molsham Street, and in Braintree, it's just in the door of George Yard, far more visible and prominent areas than they'd previously occupied. However, despite the increase in gross take-ins, the additional cost of the fully staffed branches meant that trading profitability fell by 49.8%. A great deal of work is being put in to drive profitability this year in the travel to get closer to the pre-pandemic levels. Funerals, gross take-ins in funerals in the full year decreased by 4.5% year on year. The move of the Ingatestone funeral branch in late 2023 to adjacent to the food store in the village has worked extremely well, and we've seen the number of funerals conducted from that branch increase 31% year on year. The challenge facing the funeral business is a trend that continues, in my opinion anyway, for direct cremations, with the online operators increasing market share at the detriment to the traditional funeral directors. Now, to try and put this into perspective, in the last 10 years, the number of deaths recorded in the local authority area of Chelmsford has increased by 21%. The number of cremations conducted at Chelmsford Crematorium, based on the available information, shows in the same time scale, the number of cremations has fallen by 29%. Death rate gone up by 20%, number of cremations down by 29%. Our working assumption at the moment is that gap is accounted for by the low-cost online operators for the direct cremations. And you would have all seen the adverts on the telly for pure cremations and the like. We know from talking to other funeral directors, you now get people walking into a funeral directors asking for a pure cremation. They have done that well in a certain, their model of a direct cremation and their brand name into the industry. Pure cremations has now become synonymous with an unattended funeral. We are currently working on how we try and steal that back on a local basis, trading on our reputation and the fact that we offer the same service but actually a higher level of care than a business that's potentially based hundreds of miles away can. Finally, rental income from our investment property portfolio decreased by 4.25% year on year. This was a result of the second floor of Coppleston Court, our offices above Duke Street being vacant for half the year. We also lost income from the flat above Canvey Island store, which we sold in December 2023, and several months' rent from the car sales site at the Baddow Road petrol station after the operator went into administration late last year. So that's an overview of business by business. Turning now to the high level performance. Society's gross takings totalled £101,054,000. That was a decrease on the previous year of £6,688,000 or 6.21%. Cause of that decrease, many challenges that I've outlined and the President referred to earlier, as well as obviously a smaller food store estate. On a like-for-like basis, gross takings fell by 4.4%, with the food business being the main contributor to the decrease. Cause of the decrease in food, lack of the summer weather we referred to earlier, increased competition, cost of living crisis, which is driving the market share of the discounters. Turning now to the gross profit or income, total 24,263,000. That's a fall of 3.53% year on year, based on the lower gross takings from the challenges that we've announced, and also retail crime. So retail crime, shoplifting has a direct impact on the gross profit that society earns in the food store estate. Operating costs fell in the year by 0.56%. That's a result of the smaller estate and actions taken to reduce some operating costs. Despite the actions to remove costs, some of our biggest areas of cost continue to increase well ahead of inflation. Personnel costs, which is society's single biggest cost, increased by 3.5%. That's despite a smaller estate and making job cuts in the department store business. The increase is being driven by the continued increase in the national living wage, and as a knock-on effect to that, increase of the employer's national insurance contributions and the apprenticeship levy. And this is before the latest increase in national insurance changes took effect in April of this year, with again a very above inflation rise in the national living wage. There was some good news in the year with a fall in utility costs, which was extremely welcome after many years of increases in utility costs. However, despite a fall in the year, utility costs are still £500,000 or 54% higher than in 2021, prior to Russia's invasion of Ukraine. The cost of distribution is another very large cost that society has. This is the amount we pay for Court Group to deliver goods to our store. And that cost increases year on year. Overall, last year, the total cost fell by 6.5%, reflecting lower volumes and a smaller estate, but the cost per case actually increased substantially. One of the biggest concerns for the future is the level of operating costs, as we're already seeing supplier increase their costs on the back of the national living wage and the national insurance rises on the 1st of April. As the President referred to earlier, the society made an operating loss of £746,000 in the year compared to an operating profit of £522,000 the previous year. The priority at this point in time is to eradicate the losses from the loss-making stores, or divest them, realising the goodwill held within those stores and therefore generating cash. Unfortunately, for many years, cooperative societies continued to trade loss-making stores on the basis that they could be absorbed by the other stores. Those days are behind us. No longer can we absorb trading losses for any of our outlets. Members will note on the accounts that the revenue account contains exceptional costs of £83,000. This is a result of several factors. One, the impairment of our freehold property at Rain Road, Braintree. Two, and secondly, the proceeds of our sales of Duke Street, Broomfield and South Ockenden, along with the cost and write-off of book values of these stores. The retained loss in the year was £1,343,000, being impacted by the operating loss just spoke about, the exceptional costs and a deferred tax position. The deficit before tax was £1,095,000, a position £1,010,000 worse than last year. Turning finally to net debt, the annual accounts show this year the level of net debt totaling £1,664,000, and as you'll see on the screen, that is higher than the last 2 years, reflecting the use of the Society's overdraft and finance leases. So hopefully that's given you an overview of the challenges we've faced, the challenges we continue to face, and the high-level numbers. So if members have any questions, I will do my best to answer them.
Yeah, Malcolm Wallace. Bear with me, I've got 3 or 4. And I really want to focus more on the future than where we've come from, because we are where we are, and you know, that's it. But the President did say in his address that you will be reviewing the structure, and in the report it makes reference to you remain confident that through strategic initiatives and a focus on operational efficiencies, the Society will return to better financial performance in the near future. Can you elaborate on those, please? And I don't want any confidences or, you know, secrets or anything like that, because we don't want to help anybody outside. But if you can just give us a broad outline of where you think we're going.
I think it's fair to say, if we look at our business plan at the beginning of 2024, it was substantially better than we achieved in the year, for all the reasons that I've outlined. What we have now got is a large number of food stores that are operating at loss. So we need to deal with those. But the problem is, it's not everybody now wants to buy food stores that are loss making. So that's a challenge we're looking at. How do we do it? We've closed this year 2 stores, literally just shuttered them. One in Calcutta Road, Tilbury, and one in Hawkwell off licence. We're still having to pay the rent and the rates, but that's a lot better than the level of losses. So their actions is that in my time in the Society, which is 38 years, I'd never seen. And I think, you know, you were on the board for many years, and I don't think you'd have seen them either. So we are now looking every store, what are its prospects for the future? Do we hold on to it? Is it going to get better? Is any prospect to get it? If not, it needs to go. The higher level issues are still being worked through. So what does that look like for the future? Can we continue losing £400,000, £500,000 from department stores every year? That's not an easy question to answer. And you're tied into a lease in Braintree. We own a freehold at Chelmsford. Does anybody want big properties? So there's a lot of things that are on the table that we're trying to work through, given the impact of last year, which was substantially worse than we expected. What does this year look like? And that's without the current crisis of we've got no stock on the shelves. So yes, we've done some numbers early part of this year, but are they now realistic? So management are working through those at the moment to then feed back to the board on, right, this is where we now think we're going to be, this is what we need to do. So obviously I can't add any more than that at the moment, but it's, the management and the board are just as concerned as you as a member as to what these results mean for the society going forward.
Thank you. Also, and I must say, when I saw Duke Street close, that really, really shook me. That was quite a blow. And what occurred to me is, I haven't been inside, but I assume they're selling similar things to what we used to sell. And two questions. One, were the staff given lots of consultation so they're aware of the situation? And I know you looked after that, that's great. But also, how is it that if they're doing a similar business to us, how come they can see being profitable, but we couldn't?
Where do I start? Firstly, all HR employment legislation was followed. All the employment legislation that we needed to follow was followed with. As you know, and many other members might know, we produce management accounts every 4 weeks. Every store manager gets their full profit and loss account every week. There are no secrets. So every store manager will know every 4 weeks, what am I making, what am I losing, what do I need to change? So it shouldn't have been a shock when the staff, the colleagues in Duke Street were told we're selling the store. I think there's a lot of complacency because, going back to my previous comment, corporate societies traditionally will just go, it's a loss maker, never mind. It's not all about profit. But the problem is when you look at the results, you need to make a profit to actually meet the objectives. So, did every colleague know about the performance? I don't know. I would like to think a store manager would share that, but we've got a challenge. I think the better store managers do, to be fair. Perhaps some of the inexperienced might not. In terms of how can an independent make it work, to give you an idea, a store manager for us running Duke Street will cost us in excess of £40,000 a year. Then we'll have a couple of shift leaders on about 30 hours, 32 hours a week. So what the independents will do, straight away they'll take out the store manager level. Now the store managers have stayed with us, so they didn't have that cost. They will then work probably 6 in the morning, 10 at night themselves. It's their own business. So most of the area of cost they can save is on personnel. So they're not constrained by 48-hour working time directive. It's their business. It's in their best interest to reduce that personnel cost. And certainly talking to the guy that bought Broomfield, he's probably paying, again, most of the supervisors stayed with us. But if he takes on new people to supervise his store, he'll probably pay minimum wage, or national living wage as it is now. Whereas we would have been paying probably £1, £2 more than that. And over 110 trading hours a week, it adds up. This is a difficult one to quantify, but I've referred to the distribution cost that we pay Co-op Group. It's not cheap. We know that if we went to NISA, ironically, distribution costs for goods into our stores would be a lot cheaper. But what we don't know, if we went to NISA, for argument's sake, is what we would lose at the gross profit level in terms of retrospective rebates from suppliers. So independent retailers can get away with being more expensive than us. Co-op is already perceived as being expensive. But strangely enough, we were looking at wholesale costs today to try and get some stock in. And we were surprised at how much these independent retailers can make on products because they're price marked pack. So you get a price marked pack at 99p. It's potentially 20p cheaper than us, they've got a perception of being cheaper, and they're still making good margin. So I think the economics of those independent stores are just completely different from a multiple operator. Then you pile on our central costs, IT, marketing, personnel. They've got none of that. So, and when we when we sell a store, we strip out everything out of the profit and loss account that they won't incur, and lo and behold, before I send it to the agents, it's a profit. Just by stripping out the costs we know they won't incur, and that's before they start slashing their personnel costs. So it is sad that that's just the way of the world now. And I expected a comment about Duke Street from someone. I'm glad it's here, Mal.
Thank you. Before I put my final question, can I suggest that, you know, obviously there are going to be other closures and major changes taking place, and can I suggest to the board that it gives very high priority to consultation, engaging with trade unions and make sure everything goes according to, well, how it should be, quite frankly. But my last question is, it refers to Cooperatives East, and it says we're a member of Cooperatives East. Do we still send delegates there, and do you get reports from Cooperatives East?
I can't answer that, but Kevin's shaking his head.
The answer is no. Okay. Thanks very much.
Any further questions? Okay. I'll hand over to Dan for approval of the remuneration report and the accounts.